So if I told you the most convenient way to invest in gold is to buy gold bars and find a way to store them in your home and not worry about them getting stolen, you would probably close this video. So I'm not going to do that. Because of the way the economy is going, a lot of people have been a little bit worried about investments in things like traditional stock. AI stocks are doing well right now, but will that continue, or are we actually in an AI bubble like many people speculate? This led me to look into convenient ways to possibly invest in gold in case I wanted to do so. I didn't want to have to own a bunch of gold bars. I didn't want to have to store them. I didn't want to have to go somewhere in person to purchase it, or go somewhere in person to sell it if I ever needed to. So I'm going to compare a couple of different options that allow you to do this, to invest in gold without having to go through all of that hassle of having a vault, stress, going somewhere in person, storage, all of that stuff. So it's very similar to how you would buy a stock with something like Robinhood or whatever your favorite investment broker is. We're going to compare GLD and IAU. These are essentially gold ETFs. With these gold ETFs, they actually own gold bullion in their own secure vaults. They track the price of gold and they let you buy and sell gold like a stock. There are basically two gold standard ETFs to look at. One is GLD, which is SPDR Gold Shares. The other is IAU, which is iShares Gold Trust. They both do essentially the same thing, but there are different use cases for each one. Both of them hold physical gold, track spot gold prices, use institutional vaults, and have minimal tracking error. Returns are nearly identical, but it comes down to cost, liquidity, and what you plan on doing with it. So they have these expense ratios, basically a fee that you have to pay for owning these gold shares, which to me that pales in comparison to the hassle you would have to go through to buy or invest in gold any other way. The expense ratio for IAU is a little bit lower at 0.25%. GLD is about 0.4%. Another thing is the share price. IAU trades at a lower price. GLD trades higher. So the reason that matters even with fractional shares these days, lower price equals easier position sizing and cleaner rebalancing. GLD is also extremely liquid. IAU is as well, but slightly less. For most investors, they are both liquid enough. If your goal is long-term gold exposure, based on my research, IAU seems to be the best bet. They have lower fees, first of all, which obviously is very important. Over the course of a few decades, this could really matter long-term when you are saving even a fraction of a percent more on one investment versus the other. Because this investment also has no yield. You're not going to get any sort of dividend. Another thing is the smaller share price. It's easier to rebalance, add incrementally, and fine-tune allocations. They both pretty much have the same gold, same vault quality, so you're not really giving up anything quality-wise by investing in IAU versus GLD. So if you're looking to basically buy and hold, which is actually what I was looking at, it seems like, based on my research, IAU is the better bet. Now, there are some instances where GLD actually makes more sense, but it's a different type of investor that's going to take advantage of that. Just because IAU looks better for what I'm looking for, which is long-term investment, doesn't mean GLD is bad, and it doesn't mean it doesn't benefit you more in your specific scenario. It just depends on what it is. In my case, if I was to choose GLD, I would have to fit one of a few categories. If I actively traded around a position, if I needed tighter bid-ask spreads during market stress, if I was doing options, or if I was deploying very large amounts of capital. So based on my research, again, I'm not telling you what to do. This is not financial advice. IAU seems to be optimized for buying and holding long-term. GLD seems to be better for actively trading. So if you're more of a long-term investor, maybe you're trying to outperform the S&P 500 like I am, and maximize returns, maybe set up your retirement later on. Maybe something like IAU would be a good hedge if you're worried about the economy and you want something other than just stocks. If you're more like a day trader or options trader, something like that, maybe GLD makes more sense for you. It really just depends on what you're looking for, but also make sure you do your own research. Maybe even contact a financial advisor. There are a few things I would not do with these two ETFs. One, I would not own both. That seems redundant. I would not treat gold as a growth asset. It's really more defensive and more safe. Again, in turbulent economic times, which could be getting worse anytime. I mean, it really just depends. There's always some doomsday people out there signaling, oh, we're in a bubble, or oh, the crash is coming, because it gets a lot of views. Either way, historically, you probably would have done better with the S&P 500 over gold if you were to buy and hold it for decades. But right now, gold has been doing really well over the past couple of years. That doesn't mean that will continue. Also, I would not expect any sort of income or compounding with this. Again, you're not getting any sort of yield or dividend. Unless you're really hedging risk, if I was trying to figure out how much gold I would buy in a ETF like this, I would probably have like 10% or less, unless I was just really concerned. So it's probably not something that I would ever get rich off of if I were to buy it. It could help survive uncertainty if you are someone who's just, again, trying to be a little more defensive and a little bit safer with your allocation. It's really more of an inflation and currency hedge, which again, the US dollar has not been looking great, and Bitcoin has been plummeting, by the way. Crisis protection, diversification when correlations rise. Those are some of the instances you might look at it. Another way to view gold or to do some research on it is to look at the real interest rates. So falling real rates could be bullish for gold, and rising real rates could be bearish for gold. In other words, gold might be more of insurance rather than a growth engine. So again, none of this is financial advice. The way I look at it is based on my research, how gold affects you. These are the two best ways to buy it conveniently, which I am all about. I don't want to be stuck with some gold bars at my house and worried about somebody stealing them or worried about how am I ever going to liquefy this. But as far as how much as a percentage I would want to own, again, normally under 10% is what I've concluded would be best for me. But even 10% might be a little high in some instances, depending on what's going on. So if you're really focused on growth, which is one thing I'm pretty focused on, I would keep it probably no higher than something like 3%. If you're just going for balance, you're kind of like playing both sides of growth, but also safe, maybe 3 to 7%. If you're really worried about inflation and a crisis, then that's when I would consider having maybe somewhere around 5 to 10%. But either way, I wouldn't want to ever really like just go all in on gold. To my knowledge, that doesn't usually make sense to do. So in conclusion, IAU makes more sense for probably someone like me who's looking for low cost, long-term, convenient gold investing. People who are trading, hedging, or using options maybe want to look more into GLD for that situation. Please make sure to do your own research, maybe contact a financial advisor, because everybody's situation, their portfolio is totally different. There's so many different factors that go into what investments are best for who.